Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today we're going to look at relative performance and the 10-year yield. Small caps and banks show a clear relationship. QQQJ does not, and we'll look at those charts for IWM, KRE, and QQQJ. So I want to work my way up to a ratio chart, but before I do that, I want to break it down and show you some comparative charts because ratio charts don't show us the full picture. They just give us a snapshot of relative performance, one symbol against another, and that is all. So what we have here on this chart is at the top window, we've got IWM, which is a red line, and the scaling on the left. And then we have SPY, which is the black line, and the scaling on the right. And you can see here that they're both moving up into August and into October. And then you can see IWM just breaks away and has a huge run. And SPY is also moving higher, but not at the rate of ascent is less steep. You can see this is a steeper rate of ascent. And then IWM turns flat for several months. Meanwhile, SPY continues higher. Now, the bottom window shows the performance for each of these from the starting date there in the latter part of April 2020. And so you can see that IWM was outperforming from April 2020 until November. SPY was keeping pace, but still underperforming. And there's that big outperformance there. And then IWM went flat. Meanwhile, SPY moved higher. And you can see that IWM is up 104% since April 2020 and way more than SPY. So just on that metric, it's still outperforming. But of course, if we look at a ratio chart, we're going to get a different picture. And so this next picture shows the IWM SPY ratio. And you can see it was flat from June to September, and then it took off there in October as IWM outperformed. And then as IWM went flat and SPY moved higher, this ratio fell. And that is the reason it fell, because IWM was flat when SPY was moving higher. And then this ratio started to work its way higher the last few months. So again, in the bottom, I've got the performance chart there. So you can see there's IWM breaking away in October, November, December, January into February, March, flatlining as SPY moved higher. And that's why the ratio moved lower. So the ratio doesn't tell you what's happening on the price chart. That is the main thing to remember. And I think we need to put these ratios secondary to price action. But one thing I did notice was if you look at the ratio of performance, small caps relative to large caps, IWM relative to SPY, which is the black line there, that's the ratio. The red line is the 10-year yield. And you can see that clearly both are rising together from September 2020 until early March 2021. And so that means when the 10-year is rising, small caps tend to outperform large caps. And then the ratio falls, and at the same time, the 10-year yield, the red line, falls as well. So when the 10-year yield falls, then small caps tend to underperform large caps. And we can see now that the 10-year yield is starting to rise, and small caps are starting to outperform large caps. Now, this is a very broad stroke, all right? There's nothing granular about this. This is a relationship between two assets, bonds and small caps. I'm using the 10-year yield as a proxy for the inverse of bonds because when the 10-year yield rises, that means that Treasury bonds and Treasury bond ETFs fall. So basically, as long as the 10-year yield rises, I think that is a net positive for small caps. But as far as actual decisions on owning small caps, I would still defer to the actual price chart. not the ratio chart. And here's the actual price chart. What we can see here is we have a huge advance, and actually this advance started back with the COVID low. But you can see it kind of stalled out here for a few months. But look at that. Since late September, it's been up very sharply. We got from the 135 area to the 230 area as a huge advance. And so you need a big consolidation to digest those gains. And that's what this was. And so IWM was consolidating while SPY was moving higher. And that's why that relative strength line, the ratio chart, declined. But if you look at the structure of the price chart, it wasn't a bearish structure. In other words, it looked like a consolidation after a big advance. And a consolidation is typically a bullish continuation pattern. It represents a rest, and you need a rest to digest these massive gains here. So we got this rest, we've got the breakout. The breakout is bullish for small caps, absolutely speaking, IWM. Now this resistance zone here turns into a possible support zone. So if you get a throwback to the 230 area, that might be an area to watch for some short-term oversold conditions and a potential bounce area. Is concerned, I would watch the momentum composite, and that's part of the Trend Investor Pro Indicator Edge plugin. So if you go to the bottom right here of this page, you can see the plugin opportunities there, and there are all the available plugins, and you can click on those links to learn more. And over on the left-hand side at the bottom, there are all the indicators for the Trend Investor Pro Indicator Edge plugin. And I'm going to select the momentum composite here and show it on the price chart. So basically, when it dips to -3 or lower, I consider that a short-term oversold condition. So I've got the crosshair here in May when it was at -4, and I've got it here in mid-July when it's at -3, 4, and -3. And then going to August, it was oversold. And so now if we come back to that 330, 230 area and the momentum composite becomes oversold, that would be a mean reversion setup. That would be an opportunity to partake in the bigger trend signal based on a pullback within that uptrend. So that's something to watch out for. It may or may not happen. Sometimes you get a breakout and you just continue higher. You never know. Kind of have to take it day by day. So here I am at trendinvestorpro.com, and up at the top left, you see the analysis link. And if you click on that page, you can see all the recent articles, and there's a combination of free and premium available there. And here's the article where I'm talking about the 10-year Treasury yield and small caps, and there's a chart link there. And there's also a link for the free analysis if you want to see what else is offered at Trend Investor Pro. And then tomorrow I will be doing my Thursday ETF report. That is the Trends, Setups, and Patterns report. And I cover some 20 ETFs in each report with key trends out there, patterns, breakouts that are working, and then short-term bullish continuation patterns. In fact, we've got some bull flags working in some of the energy ETFs, and I'll be highlighting those tomorrow. So the financial services sector is one of the bigger sectors in the Russell 2000, and regional banks are a big part of that sector. And I'm looking at the same type of analysis here. We've got the ratio chart of regional banks to SPY, and you can see that ratio is rising, the black line, as the 10-year yield rises. So there's a positive relationship here, a positive correlation. You can see the 10-year yield falls and regional banks underperform SPY. And now we can see the 10-year yield is rising and regional banks are outperforming. Now, of course, this isn't a straight line and this isn't a perfectly linear relationship. There are lots of zigs and zags. I'm just trying to get the broad stroke here and decide whether a rising 10-year yield is positive or negative for regional banks. Now, as far as relative performance, a rising 10-year yield is positive for small caps and regional banks. Now let's look at the price chart to see if the price chart confirms what we are seeing. And if we look at regional banks, we can see a monster move, 34 to around 70. It pretty much doubled from late September until March or that high in May. And then you had a triangle consolidation, and we've got a breakout to new highs. So this one is bullish as well. And if you're looking for an opportunity, I'll pop on over and look at the momentum composite. So as with IWM, I don't see an opportunity now, but if you're looking for an indicator that can help you identify that opportunity, you've got a kind of a resistance zone here around 70. So that might be support if we get a pullback. And then if that momentum composite dips to -3 or so, that would be a short-term oversold condition within a bigger uptrend. So there's also an assertion out there that a rise in the 10-year yield is negative for high-flying stocks with high PE ratios, high price-to-sales ratios, high growth prospects. And so to test that, I looked at the relative performance of QQQJ relative to SPY and the 10-year yield, and I don't see a clear-cut relationship. When you look at the previous two ratio charts, you can see that IWM, small caps, and KRE, regional banks, clearly outperformed when the 10-year yield was rising and underperformed when the 10-year yield was falling. But if we look at this chart here, we can see that QQQJ is outperforming when the 10-year yield is rising. The 10-year yield is red, and the QQQJ SPY ratio is black. So there's a positive relationship there. Then it turns negative when the 10-year yield rises further and this ratio falls. And then you can see a positive relationship because the 10-year yield edges down a little bit, but this ratio falls off a cliff. And then we can see some more ups and downs that don't really correspond with what's happening to the 10-year. So this relationship is clearly not clear-cut. And so I think if you want to look at QQQJ, tech stocks, you need to look at the actual price charts because there's not a clear relationship with the 10-year. Don't correlate that. And if we look at QQQJ, we can see a clear bullish chart. We got a big advance, a big correction, a breakout, and then another correction. And this is part of this. You can see this big advance here, a correction and a breakout. Now we had an overshoot here, but hey, this is QQQJ. What do you expect? But then got a breakout in October and hit a new high. So QQQJ is hitting a new high in an uptrend and doing just fine. If you get a pullback to this broken resistance area around 34.5, 35, that might be a mean reversion opportunity. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.